Well, it turns out that we have some interesting middle of tax season developments with Arizona's income taxes. Not something totally surprising because we thought we might see something of that sort, but something that probably you could have lived with not knowing until after tax season, maybe. But we'll talk about what's there. I'm Ed Zollers, and I'm going to kind of record this because this is the simplest way to get this out and talk about the key issues we have to deal with here rather than trying to write articles, get everybody to read articles, and do those sorts of things. We'll just go over a little bit here on this outline of how things run and roughly talk to you about three main areas of developments. Here, we're going to talk about today is the fact that, which is really the thing that triggered doing this today, was that we did get a decision from the Superior Court in Maricopa County regarding the status of Proposition 208. And that's probably going to be the final answer, but we'll talk a little bit about, why it might not be, but still seems highly unlikely that we're going to see a reversal of it. We'll talk a bit about the Department of Revenue's decision to waive the first two estimates under the Arizona pass-through entity tax and talk about, while even though you don't have to pay estimates, and you actually won't be able to until September, you probably still want to catch up, even if the department doesn't want you to do so. We'll talk about the fact that when we talk about the pass-through entity tax, it's very important to separate the federal impact from the state impact. And don't get confused. I see that consistently in a number of other states that have implemented this law and this sort of provision. And it's been a consistent area of lots of confusion. So I seriously want to make sure you understand why it doesn't really matter when Arizona says you have to pay it. Well, you will get penalized if you're later than they say you have to pay it, but there's going to be a much earlier deadline for practical purposes we'll talk about. And then finally, we're going to take a look at the status of the Arizona Small Business Income Tax and the weird situation that may have actually now we may see some additional developments on after the Prop 208 decision regarding the Arizona flat tax and why the final disposition of that will turn out to be crucial to what we're going to do about the small business income tax for next year. And unfortunately, maybe is something we need to know but won't know until November. We need to know now. We won't know until November in order to decide if we should be paying estimates under the SBI or for the regular income tax. But let's start with the Prop 208 decision because that came down this week. Hopefully, you're all aware that Proposition 208 is the provision that provides or that provided for the voter approved provision that would have provided for a 3.5% excise tax on incomes, taxable incomes for Arizona taxpayers in excess of $250,000 if they're filing single or married filing separate, or $500,000 if they were doing married filing joint or doing head of household. That provision was challenged in court as to whether or not it was legal under Arizona law. There were a ton of options put forward about why the plaintiffs argued it was illegal, couldn't work. All of them were struck down except for one. But the one, again, if it's going to be considered unconstitutional, just one of them is good enough to carry the day. But that involved going back to the Arizona Superior Court. I'm just doing federal too often when I say district court. Going back to the Superior Court in Maricopa County, who tends to hear the tax cases, and having that trial court make a decision about whether or not Prop 208 would raise too much money. Well, we got the decision this week. The case is the case of Fan versus Arizona, case number CV 2020-015495, and this decision was issued on March 11th. Now, if you took the tax update course for Arizona this year that I teach for the Arizona Society, you probably have already seen that case, right? We've talked about the issue, what was decided there. This is the return. What happened in that case previously was there had been a motion for summary judgment put in by the plaintiff in this case, which would be Senator Fan, as well as various other parties who were the plaintiffs trying to get 208 thrown out. And the Superior Court in Maricopa County had denied the basically the motion for summary judgment, saying there were matters of law to be decided. The plaintiffs appealed that up to the Arizona Supreme Court. The Arizona Supreme Court backed the trial court, except for the trial court's analysis of whether it would be an issue that had to be decided, how much money Prop 208 would raise, and whether, despite the way it's written, the amount of money it raised would have to count against the caps that Arizona school districts can spend in tax money. And if it did so and it raised too much money, the Supreme Court told the Superior Court that if it was raising significant amounts of money that would go unspent, that it would have to be struck down as unconstitutional. And the Supreme Court, in what I kind of agree with the judge in the case, in a kind of a weird view, decided that we test 2023 and that would just apply forever. And why I think that's a little weird is because, well, if 2023 turned out to be didn't raise too much money, but somewhere in the future it didn't matter because 23 was good. Yeah, it was a little weird. I mean, the Supreme Court, the way they ruled, but they didn't want it coming in and out of the law. It was, I have some issues with the decision from a mechanical standpoint. You know, we'll talk about whether the law, my theory is it either probably should have been ruled unconstitutional because it had the possibility of raising too much money, and we don't care whether it does or not. If there's no guardrails to stop that, then I think you might argue it's unconstitutional, or that didn't matter, and the excess money be held and used in future years, and the legislature does have the power to go ahead and allow that spending. So you could have gone that route. But in any event, we did have this weird thing sent back to the court to decide. So in this case, the case was returned to Superior Court from the Arizona Supreme Court. And the Superior Court found that spending limit imposed by the Arizona constitutionals on school districts would prevent public schools from spending a material amount of Prop 208 funds. They held specifically they did not agree with the defense that the Supreme Court opinion should have been read to say that there had to be basically that had to be absolutely clearly established that it would always raise too much money. The court said, nope, I've read the opinion. That's not what they said. That's not what they told me. And also that or that you could ignore this year because it was unusual. So the 23 spending year that's being tested here, the 22-23 spending year being tested, that particular issue, the 23 year, that year, because of some special funds going in, that we shouldn't use that year. We should ignore those funds. And the court also said, nope, not really. Those had to be counted too. The fact that it's unusual, there could always be many other unusual funds. So, and he said, look, the Supreme Court didn't make that a condition, so we're going to go it. So it ruled that the test year is 2023, regardless of whether that would be true in future years. So regardless of whether it would raise too much money in the future, we're going to test 2023 and determine that it did. The determination was made that it would raise excess funds in 23 because it was, in essence, there was basically more likely than not that it would raise funds that would leave a material amount of funds unable to be spent, that it had to be struck down. And per the Supreme Court ruling, basically the Superior Court in Arizona ruled, or the Superior Court in Maricopa County ruled, that it had to be struck down for all years in the future. So the takeaway from this is we do not have Prop 208. Now, that said, there should be a little asterisk here for just a second. This is a decision that can be appealed. It may be appealed. In fact, the judge in the case seems to think it will be appealed. I'm not so sure. I'm thinking that it depends on how the defendants read this. If the defendants in this case read this as it is highly unlikely the Arizona Supreme Court will rule in their favor, and I think given the decision that came down, I would not expect anything I've seen so far to convince the Arizona Supreme Court that, that this should be overturned. In essence, the only question that the judge was supposed to decide was, would it raise too much money for 23? And as long as that is proper, that's what they asked to be tested. We have a ruling on that. And so either you got to show that somehow, based on the facts, it should never have been ruled that 23 would have too much money, or do you really want to spend time there and rather look at something different? Because again, you're going to spend money to do this, and there may be other things, as we'll discuss a little bit later, that they may be spending money on. So we'll see if it gets appealed. But I suspect even if appealed, it'll be just basically, it will get the final word of no, this doesn't work. I'll probably be wrong for that, and it'll somehow come back, but I really don't see there being a significant chance of it coming back at this point. But now let's talk about the practical impact of this here, okay? Now, number one big change is there is no change in the total tax computed on 2021 returns. And I want to emphasize that because there are going to be clients that call you that will look at the Arizona forms and will see that the 3.5% surtax is showing up on their Form 140. And they're going to say, I read in the paper that was struck down. So we were going to file an amended return, or they're just going to pay me that back, right? Wrong. Okay, the catch was the errors we had added to the law last year. Arizona Revised Statutes 43-1011 B8A. And that capped the total maximum marginal tax rate, combining both the regular tax and the tax and the excise tax at 4.5%. So the rate could never exceed 4.5. What that means is this year, if you look at it, I'll send up here in just a second a copy of the Arizona, or I should say a copy of Table X and Table Y, and we'll look specifically at this. But what it meant was the max rate for 2021 was going to be 4.5% combined. Now, our max rates are 4.5% for regular tax and 3.5% for surtax. So it was going to be an 8% marginal rate at the top end. This law reduced that rate, but the education surtax had to stay at 3.5. Assuming it had been found valid, the Voter Protection Act strictly limits what the legislature can do against that tax. They can't change it, they can't amend it. So anything they do would be void if it reduced that tax. So what was going to happen was that we essentially set the rate, the regular tax rate drops to 1% once somebody's income got above the $250,000 or $500,000 trigger under that provision. And if you look at Table X and Table Y on Arizona, and this is what I'm showing you if you're watching here right now, we got Arizona Table X and Table Y for this year. And you'll notice under Table X, you'll notice the interesting part we get down here. When we finally get to the point down here where basically our income gets above $250,000, we go from 4.5% to 1% rate, right? It's a progressive rate that then reverses, right? As soon as we get to 250, and the same thing happens to $500,000. And then you're told that you would then have a surcharge liability of 3.5% at that point. So what's happening here is we're keeping 4.5. We're just taking the money from the regular fund and moving it into the education fund if Prop 208 had been valid. When Prop 208 becomes invalid, we're going to find that, at this point, we will no longer reduce it, right? We're no longer going to have this reduced there will no longer be a reduction of that rate to 1%. So what's going to happen is that rate will now go back to being set at a full 4.5. So what's going to happen here is you're going to take the table here And we're going to say if you're over $166,843, you take your taxable income minus 166,843 times 4.5%, add that to 6,287, and this bottom line of the table simply goes away, right? Because we'll no longer have this 250, that'll disappear. For the top of that bracket goes to infinity. For a married couple, the same thing except taking place now at the 500,000 level. We delete off the $500,000 cap on the 4.5% bracket. We get rid of the final line. We don't have a surtax. Now, Arizona Department of Revenue, I don't believe, is likely to actually modify the forms. It's still computing the right tax. It just has it as two parts. If they did change, I suppose they could, but changing this late in tax season, I just see that causing more problems than doing any good. I think that's going to be our big problem there. I just don't see it's going to do any good to have that. So what's going to happen here is, we just don't get, as I say, with the surtax gone, we have a no longer reduction of rate. So what that means is it doesn't matter for this year, right? Nobody's getting a refund. Remember, nobody's getting a refund. That's the key thing to remember. The practical impact of this, for 2022 and later years, the practical impact of the repeal of Prop 208 depends on the fate of the flat tax. If the flat tax passes, the top rates will go below 4.5%. That cap will no longer matter because there won't be any way to get above 4.5, so it'll all work fine. If, however, the flat tax does not go into law, and we'll talk about why it won't here shortly, why it might not. It's just not won't, but why it might not, and the various ways it might not. Then we'll be at a 4.5%, the same as this year for 2021, same as 21. And in essence, and it would still be the same as if Prop 208 remained in force, but we just have this year. So, it does, in essence, it makes, if the flat tax doesn't pass, the repeal of Prop 208 will not change anybody's tax liability. However, if the flat tax passes, then it will change people's tax liability at the above $250,000 and $500,000 of taxable income, because we will then have a rate below 4.5. So, as I say, it is possible this ruling, while having a big practical effect at the state level on the classifications of tax revenues and what they can be spent for, may have no practical effect for your clients on their returns. It would be the same whether it was valid or invalid. They'd still be paying 4.5% of the last dollar. So, for all we know, we do have Prop 208 done now, so we'll see how that goes. The Department of Revenue also issued early this month a special ruling that we were expecting, but it took a while to get out. And this is the Arizona Estimated Tax Notice for Partnerships and S Corporations making the pass-through and de-tax election. This they posted on March 2nd. The Department of Revenue is not ready to accept estimated tax payments on the pass-through entity tax. Arizona state law requires you to make the first estimate, right? Basically, you're going to make 4 estimated tax payments on this tax. And obviously, we're coming up on the first date that you'd have to send a check in by. And the department's saying we're not going to be ready for either the first or the second estimate. So rather, we're going to therefore waive the first 2. We are not going to ask for money. They're buying themselves until September 15th to have to be ready to do something on this tax. In September, you will pay 25% of the tax that will be due for 2022, which, by the way, you won't really know, but you got to get this right. There is no prior year to play with here. So you have to pay in 25% of that by September. That will not apparently commit you to doing the pass-through entity election, but it will be something that if you do it and you didn't make a payment, you'd be penalized for not having paid 1/4 of it by that date. So that's going to be one of your issues going there. However, this whole bit about Arizona saying, hey, well, that's great, we don't have to pay half the tax. Well, per Arizona law, you would pay only 1/4 of the tax in 2022, but you're not going to want to do that. Assuming you're making this election because you want the deduction for state and local taxes to go above the line, be part of computing AGI, and assuming you're using it to work around the $10,000 cap on state and local taxes, you'd like to get a deduction this year for those taxes, correct? On the 22 return. Well, in order to do that, notice 2020-75 makes it very clear that you can only claim the deduction on the partnership return or the S-corp return for taxes that are actually paid during the tax year in question. So even though we theoretically would only pay 25% of the tax due by September 15th and the other 25% on January 15th, and that's what Arizona requires not to penalize you, as a practical matter, 25% of the tax is due on September 15th. That gets the penalty problem out of the way. And the other 75% is due by December 31st. If you don't pay it by December 31st, you will not get the deduction until the following year unless the IRS makes changes to what we currently have in Notice 2020-75. If they would actually get out the proposed regulations on this area, and tell us we could rely on them and give us a little more guidance about this problem. Because, by the way, that tax paid during the year appears to apply even if your partnership or S corporation is an accrual basis taxpayer. Basis of accounting does not matter for this purpose. That's something we've been beating to death in other states already. So that one we know is there. Now, again, some of our problems we're going to have for the pass-through entity tax. We've already talked about the fact that we have to get everything paid in by the end of December to make this work. The whole point of this thing is to save federal taxes, not Arizona. If you want to save the federal taxes, you got to get it paid by the end of the year. Okay? Simple rule. The other problem we got with this is the rate on the pass-through entity tax is 4.5% currently. Now, that is if the flat tax passes this year, and your client has most of their income coming from pass-through entities, there's a really good chance you'll have too much tax paid in. And, you'll get the deduction federally. That's not your problem. Your problem is that you really don't just want to send extra money to the state. Rather, the idea of this is we get a tax credit on the individual return to reduce the taxes we pay the state of Arizona. But this credit is non-refundable. Now, that is unlike virtually every other state that uses the credit system. Now, a few states use another system, which is then they just take that income out of the state tax computation for the individual. Our neighboring state of New Mexico just enacted a law that's going to go that route, right? It won't use the credit mechanism. But the majority of states use the credit mechanism for a credit against state income taxes. And those who use the credit mechanism, vast majority of them except Arizona and California. And no, I don't know why we decided we need to follow California on this. But like Arizona and California, the other states, unlike Arizona and California, make it refundable. So if, for instance, my client, let's say we got a client that elects to pay the business alternative income tax in New Jersey. That's what they call their pass-through entity tax. They gave it a neat acronym. But if you pay that, even if it turns out that your actual New Jersey tax is only half of what was paid in on your income, the state of New Jersey is going to send you back the extra. It's going to be a refundable credit on your personal return. State of Arizona is not going to do that. It's a 5-year carry forward. Now, that's a problem, A, with cash flow because you're going to give the state money ahead of time. But B, remember, it's got a deadline. It's going to go away after 5 years, so we got to either not make the election some years so that we can get enough space or have other income to absorb that carryover. We got to get that done within 5 years. That's a significant big problem. And if our rates and if the flat tax drops, right, the rates drop, but this rate is not reset, and we know it won't be for this year. That's a given. It will not be reset for 2022, because unless they, for some reason, let's say the court says a challenge that says the flat tax could not go to the ballot, it just has to go in effect. Unless something like that happens, we're not going to know, or they're not going to know in time to make a change at the legislature to this rate. So 4 or 5 is apparently what we're stuck with. And they're probably going to have to stick with it until we're done. The other problem is, as you're discovering this year, for those of you who may have clients that have income in California from pass-throughs that have been asked about making the California pass-through entity tax election, it doesn't work so well with backward credit states, right? It works okay if you get the credit on the state, if the credit for taxes paid to another state comes on the resident state, because there, and Arizona has this covered, there we could count the New Jersey bait as a tax paid by an Arizona resident to get the credit to basically, so we'll get the credit for taxes paid to another state, we'd be fine. It's not going to cause us a problem there. We won't overpay the Arizona tax. We want, in essence, pay the full Arizona tax plus the full New Jersey tax on this income. However, because of how the California rule works, and this is also a problem because California's tax is not refundable on the credit, California will apply the state tax. We got a recent correction that California will apply the credit for taxes paid to other states before eating up the pass-through entity tax credit on individual return. But the problem is then we have that carryover and the 5-year carryover period. Same problem as Arizona, and the only good solution is going to be to, in essence, go bare and not make the election at least some years to absorb that up. And if you have a situation, and remember, it's kind of an all or nothing too. So if you have a situation where you're paying, let's say you've got a lot of California income this year because you have a partnership that generates, they sold their rental property, big gain this year. We don't expect to have huge amounts of California income in the future. I'm going to have a big carryover and nothing I can do with it. The same problem will occur to California residents who have that big sale in Arizona. Same problem. They won't be able to do anything with it unless they have significant other Arizona taxable income. Yeah, it becomes messy. And then it becomes the fun of if the partnership doesn't need to file in the other state, in the resident state, then, yeah, the backwards credits may cause problems. Oregon is in the mix too because their pass-through entity tax comes into play in 2022 as well as Arizona's. Finally, let's do a brief discussion of the flat tax and the small business income tax, the SBI, the thing we're all having fun with this year. Starting next year, or starting, I say this year, 2022, the small business income tax rates in the law that are scheduled, and they are scheduled to drop over the next couple of years, but they're always higher than the rate that got stuck at the end of the session last year in the flat tax for 22 and later years. You may remember toward the end of the session there was a big flap about the tax cut, and apparently it was going to foul up the budget for the city of Globe, and the senator representing Globe therefore would not vote for it. So they had to make a quick deal to back in to delay the cut by a year. But then they would increase the cut. In essence, they'd get some of it back by changing the rates in later years. To get it, but they would defer it out a year, which is what needed to happen. Well, the problem is they never went back and changed the small business income tax rates to equal those. And remember, the SBI was enacted as a Prop 208 workaround that ended up this year weird because it's 1% below the rate because we were supposed to go to 3.5 on the flat tax at one point until we got this big fight over Globe. And then, so that's why we got this 1% down level this year. And now the problem is the flat tax, if the voters do not vote to put it in, right? They don't vote in favor of the flat tax in November if it's on the ballot, then it would still count in the future. But if the flat tax passes, at least the one we currently have that is going to the ballot, or the court says we can't vote on it so it becomes law, if in any way, shape, or form the law we have becomes the law for 22, then it's really almost never going to make any sense to make the SBI election. Because with the top rate less than the flat SBI rate, I'm trying to come up with some scenarios, and there's some weird scenarios that we've all discovered with the SBI, but I still have trouble coming up with an example scenario where the SBI election would be in your favor. If the top marginal rate is 2.98%, and the SBI flat rate is 3%, I don't really see a way that works in our favor. I can't see how it's going to be favorable to make that particular adjustment. So anyway, that'll be the key. But if the flat tax fails at the ballot box, then the SBI will work in even more cases than it did this year. Because again, the SBI rate is scheduled to go down to 3%, as I recall, in 2022, not 3.5. So that'll mean it will give us a bigger spread versus the upper rates. There'll be more rates, more taxpayers that will qualify to get a benefit here. The benefits will be bigger. So either the SBI becomes irrelevant next year, or it actually becomes way more powerful. So, and that really fouls us up in terms of paying estimates, because that's our problem. Do you pay SBI estimates or not this year? And it's a little issue. Now let's talk about the status of this vote. So as you're aware, whether the SBI matters in the future depends primarily on whether we get the flat tax or we stay with the current tax brackets. There is a court challenge to the referendum that sent the flat tax to the ballot. Now, currently before the court is deciding on the issue of a number of arguments they're making about whether such issues can actually be referred to the ballot. And some of these are very similar to arguments that the Supreme Court did not find persuasive on Prop 208. Now, whether they'll be persuasive here is a little more open. I mean, it's not exactly the same issue, but it is the legislature trying to argue that the voters can't ever say anything about this. And at least the Supreme Court didn't seem sympathetic to that theory before. So I don't know if they're going to be similarly unsympathetic this time. But anyway, that's one method. But the proponents or the opponents of the opponents of the referendum do understand they might lose that one. So they have a more traditional challenge that's also been filed. So this is kind of like the just in case. We would go the traditional route when you're challenging referendum. Is you always try to say, well, some of the petitions are somehow flawed. Some of the signatures are invalid, etc. The county recorders messed this up. They shouldn't have certified this, etc. So based on that structure, they'd go to court on that. My guess is since they didn't lead with that, they're not really thinking that's the one they're going to prevail on. I think they bet much heavier on the first one, and then after the Supreme Court kind of nailed out those types of ideas in the Prop 208 was when they decided to start throwing together this secondary challenge. Just in case we lose the first one, which it seems like we might the way the Supreme Court was writing, we're going to have the secondary challenge. I don't know if either of these is going to succeed in taking from the ballot. Either one could, and if they do, then we know the flat tax if that were to happen. However, the other option the legislature has is to try to moot the whole thing. They could repeal and replace, kind of like we had with the Affordable Care Act. But this would be for a different issue. The idea is if they repeal the flat tax, the legislature always can, instead of letting legislation go to referendum, the legislature could repeal the bill prospectively. Now, especially with the Voter Protection Act, there's a lot of advantage to repealing it prospectively. Because if it goes to the ballot and is passed, it will be subject to the Voter Protection Act protections. Now, what that means is it could become very, very difficult to make any sort of rate change in the future. The VPA would be there, and even if the change was one that was considered within the spirit of what people voted for, you would need a 75% vote in the legislature to do it. And my guess is getting a 75% vote in the legislature to do anything is highly unlikely unless we get far less partisan than we are now. So my guess is there may be a valid reason to want to repeal it and try to pass something else. Now, they could simply try to pass a slightly revised flat tax that gets to about the same position, right? So it'd be a similar tax cut. Now, it almost certainly can't be the same one. If they just put the same bill back in, I think the courts would say, no, that's what got referred. You can't just pass it. You can't just kind of void it and try to sneak it back in directly. But there would be an argument about how much different must it be and what could we do. I think there could be a good argument that if you simply, let's say, said, okay, we won't be the flat tax anymore. We'll keep the brackets, but we'll do these lower rates. And you'll do it in ways that you think will raise similar money. Then maybe it works. I don't know. Of course, I have to give up the term flat tax, which I know they'd hate to give up. So we'd have to see what they could do. But if they do that, the big problem is you're going to have to go out and check the details of that, because the details of whatever they replace the flat tax with, now we have to compare that to the SBI to see if there's any cases where the SBI would give us a lower tax than that, with the SBI still being around. But the other problem with repeal and replace, which I think is a big practical problem, is that you also have to consider that it would appear if they pass that in this session, did not pass it with an emergency clause, which there is no way that's going to happen, they're going to get 0 votes from the Democratic side of the aisle. That means they cannot get an emergency clause on the bill. It would be open for a referendum. Now, the backers so those who put the flat tax on the ballot first would presumably be motivated to throw this on the ballot, and they would have a bit less time to do it. The deadlines are tighter in the second year, but they still could throw it to the ballot. And so we might not be any better off. So, yeah, I don't know. Right now, it's not clear if the legislature will do a repeal and replace, but it is now something on the table. The other big question is, can they get all the Republicans to vote for it? And that may also be interesting, to see if they could get all the Republicans to vote for repeal and replace, because, again, they need everybody in the mix to do it. And as I note, and it might all be for naught. It might end up just getting back on the ballot anyway. So 6 of one, half dozen of the other, they might want to decide. They may just want to, and I guess they could do repeal and no replace, but the theory being that at least frees up their ability to pass a tax cut next year, right, with rates that are different, rather than, even if they win this time, they could probably never do a rate change again. I think the Voter Protection Act make it very, very difficult for practical matters to get that done. So that's also a problem, because if the voters put it in, then it really, the only easy way to change is get the voters to vote to change it, which is not something the legislature would like. Yes, voters might vote to cut their taxes, but legislators won't get credit for that. And if you're running for a higher office, you'd like to have credit for that. So in any event, this is our mid-year tax update, brief tax update here, or not so brief as it turns out. In Arizona, we expect more things. Obviously, the fate of the flat tax is the crucial thing remaining on the table, as well as the pass-through entity tax, which you're going to have to start talking with flow-through entities about, but you don't have to actually write any checks until next September. So you can take a look at that. If you have any questions, you can email me, edzollers@currentfilltaxdevelopments.com. Also, we'll be on the Arizona Society's Connect site, so we'll take a look there. But as I say, it's interesting. We'll see how everything goes. We'll see how the year runs. We'll see if anything else comes up. And who knows? We may have some other neat, fun things to look at in Arizona before we even get through the end of tax season. So, keep alert. And we'll talk to you all in a later broadcast if something else comes up.